This is Matthew Cratter from Trader University, and today I want to talk about trading altcoins. Is this practice hazardous to your wealth? And by altcoin, I mean any cryptocurrency that's not Bitcoin, that's not BTC. So I've gotten a lot of emails over the past few months from people. This is a selection from one of them. The plan is to keep trading ADA, Cardano, and XRP, Ripple, and then move my profits into Bitcoin. I see this a lot, and I think it's fundamentally misguided for a number of reasons. If you're going to trade altcoins, i.e. jump in and out, day trade them, swing trade them, your timing needs to be really, really good. It's very difficult, for example, if you're looking at this chart of XRP, to know exactly when you would have gotten in, when you would have gotten out. Obviously, trading it when it's above the 50-day moving average, as we do with momentum stocks, is one possibility. But the problem is these cryptocurrencies, especially scammy ones like XRP, they trade much more like penny stocks. They're much more mean reverting. They're unlike momentum stocks, which tend to trade a lot better. Also, unless you're doing this in a tax advantaged account, you're going to need to pay taxes on those profits, which means that when you're done with this period of trading altcoins in your life, you are going to end up with less money than your last trade, simply because you have to give some of those profits back to the government in the form of taxes. So we're basically talking here mostly about people who are trying to trade altcoins, trying to build up a small fortune, and then move that into Bitcoin. I have nothing against trading alts. I don't think it's a trading strategy that has a positive expectation, simply because they're so mean reverting, and even mean reverting securities are very difficult to trade, simply because we knew that XRP was going to mean revert, but it could have gone up to $1 or $2, or $1.50 or $2 on the way to going back down to zero, where it's headed. As I said, also, you need to be able to spot outright scams like XRP that can just implode overnight. I've been trying to warn people about XRP. It looks like the SEC is finally going to take them down, and we're getting a lot of bad news for XRP holders, where all the major US crypto exchanges like Coinbase are suspending trading in XRP. What this means is no new capital flows into XRP from the US, which is obviously a huge blow. XRP is a scam, and I hope these guys end up in jail as a result. So here's the chart of XRP for this year. We can see how mean reverting it is, how volatile it is. The problem is, if you lose money, most people seem to lose money trading altcoins, and this would make sense to me because they're very, very difficult to trade. They're much more difficult to trade than momentum stocks are, and I want to emphasize that. I'm not against trading per se. I like to trade those securities that tend to trend. Commodities don't trend very well, so I tend not to do momentum trading with them. High-tech stocks, biotech stocks, these tend to trend really well. Altcoins do not trend well, so they're not really good candidates for momentum strategies. And so the problem is, if you decide to trade altcoins with the ultimate goal of making more Bitcoin, and you end up losing money trading altcoins like most people appear to be doing, it would be my guess that 95% of people who trade altcoins end up with less money at the end than when they started. Not only have you lost money in your home fiat currency like the US dollar, but there's a huge opportunity cost associated with it because you have not been in Bitcoin that whole time. So we can see here, for example, how the blue line is XRP versus the dollar, now down 5% on the year. The red line is Bitcoin versus the US dollar, up almost 260%. So if you're trading in and out of XRP to get rich in Bitcoin, this just did not make any sense. And even just being break even on the year with your XRP is a huge tragedy, because this Bitcoin thing is only happening once in our lifetimes. It's gone up so much in this year that if you've been trading altcoins and you haven't made at least 260%, you are lagging the benchmark. If you're getting value out of this video, I would just ask you to please hit that subscribe button right now, and also hit the like button. As I mentioned, altcoins are mean reverting. They spike up, as we saw with XRP, on rumors, and then they crash back down. You need to show profits in US dollar when you trade altcoins, but you also need to show profits in Bitcoin terms. This is simply because Bitcoin hodling returns are the benchmark of any crypto trading strategy. Just like if you're trading momentum stocks, your benchmark that you're trying to beat is the buy and hold returns of the S&P 500. If you can't beat something through trading, if you can't beat a benchmark through trading, you're better off owning the benchmark. And for a lot of people who don't have the time to learn how to trade or don't enjoy trading, it makes sense just to hold SPY or QQQ. But Bitcoin is a special thing because unlike the S&P 500, it doesn't. It actually goes up 100, 200% every year on average. I think over its lifetime, it's gone up more than 100% every year. And so if you're jumping in and out of Bitcoin, if you're trading altcoins and you're not beating Bitcoin's returns, you should probably just take that portion of your portfolio that you're allocating to stores of value like gold, or you're allocating to cryptocurrencies, and just put that into buy and hold or buy and hodl Bitcoin. As we mentioned, one of the main problems with trading altcoins is you're fishing in a pool of failed projects, scams, other really ugly fish. It's like fishing in a pool of penny stocks that occasionally you'll have a winner, but they just don't trend as well as the higher priced tech stocks and momentum stocks. I thought it'd be fun to take a trip down memory lane, take a look at what the major cryptocurrencies were back in basically 3 years ago, December 2017. Obviously, Bitcoin was still at the top, with Ethereum second. Bitcoin was trading at just $19,000 per Bitcoin, whereas today it's now at, call it 26,600. Ethereum has really gone nowhere in 3 years. It was trading at 719 back then. Today it's at, well, it's actually gone down a little bit. It's basically at 718, 719. Back in 2017, Bitcoin Cash, which was a fresh fork of Bitcoin, had a market cap of 31 billion and a price of 18,062. Today, Bitcoin Cash, you've got to scroll down here to see it. It's got a market cap of just 6 billion, and the price has gone down to 344. This is what I mean when I talk about failed forks, failed cryptocurrency projects. Back then, XRP was in the top 5. Actually, it was number 4, had a market cap of 28 billion and a price of 72 cents, 73 cents. Currently at 18 cents, market cap down to just 9 billion. Probably headed to zero. There are arguments to actually make that XRP could go negative if it's deemed part of a partnership. If it begins to appear, trade like a partnership, it could actually go negative if that partnership has liabilities that can be then passed on to partnership holders. So there are arguments for XRP to actually trade negative in a similar way to what crude oil did this year. 2020, anything can happen. Finally, most of these don't really make sense talking about. Well, we can talk about Cardano, ADA. Back in 2017, it was at 51 cents. Today, it's at, it's at 18 cents. Finally, the last one I wanted to look at is some of these names have just really dropped off. IOTA, MIOTA is the ticker, was trading at 393 per IOTA, had a market cap of only almost 11 billion. And today you have to scan down. It's dropped down to number 36, trading at just 29 cents, has a market cap of $800 million. Now, I try to keep an open mind to future projects. The problem is the incentives in the space are such that you're highly incented to create your own, print your own money, use it to fund your corporation like Ripple did. Hopefully the SEC actions put an end to this. But when you're trading altcoins, you were basically trading mostly junk. I do have some respect for Ethereum. I like the various DeFi protocols and projects that are going on. I don't like that Ethereum is proof of stake. I think that's a very bad foundation to build a cryptocurrency on. Ethereum has also had kind of a winding past to where it is. It's had many different incarnations, and the DeFi incarnation is probably the most interesting. That being said, Bitcoin is just an order of magnitude higher in terms of market cap, liquidity, institutional interest. Anything else, anything below these top two, Bitcoin and Ethereum. I currently just own Bitcoin. I don't own any Ethereum. But these are just not worth your time. If you do buy and hold with them, I do not think that you will outperform Bitcoin. If you try to trade them, you'll probably end up doing even worse. A lot of people try to make this game more complicated than it should be. Bitcoin is easy. You just buy it, you dollar cost average into it with money that you can afford to lose. You never sell it. And then maybe someday you borrow against it if you need to. So you don't have to worry about timing the buy. You just dollar cost average in over a series of weeks or a series of months. And then you don't have to worry about a price target or where you're going to sell it, simply because it should continue to go up forever in US dollar terms, in fiat terms. I honestly believe that. I honestly believe that Bitcoin will go up for the rest of our lives. If you think that's an insane thing to say, think about what's happened to California housing, Manhattan housing, the US stock market, the S&P 500, the NASDAQ 100. These have all gone up over our entire lives. Some of them, like the QQQs, didn't exist back when I was born, but they have gone up forever simply because the US dollar has gone down, also because these are new technologies that the world wants, in the same way that Bitcoin is a new money technology that the world wants. So I'd encourage you to not, and this comes from a trader. I love trading momentum stocks. Bitcoin, it just doesn't make sense to me to trade. I don't think I can outperform it jumping in and out, certainly not in a tax efficient way. This is much easier. You just buy it with money you can afford to lose. You don't check the price and you hold it forever. The problem, there's a structural problem with these people who say that I'm long a certain altcoin or trash coin and I'm going to eventually sell it for Bitcoin. What this means is that if a lot of people are doing this, there will be future selling pressure on trash coin as people exit it, and future buying pressure on Bitcoin as people move out of trash coin into Bitcoin. You can try to swim against the current, but I've seen this again and again. Everyone finally capitulates and ends up buying Bitcoin. Everyone who hates Bitcoin, everyone who says it's a bubble or scam, they eventually come around. Michael Saylor pronounced the death of Bitcoin. He had a tweet about it, how it was a scam or a bubble back in 2013 or 2014. He was a smart guy, open-minded guy, came around and bought, call it $1 billion worth of Bitcoin in 2020. So I would say that trying to be long something else in order to own Bitcoin doesn't make a lot of sense. It's like trading a penny stock in order to eventually buy Amazon stock. You're better off just buying whatever your final target is. And the special thing about Bitcoin, the special thing about investing in companies and cryptocurrencies that benefit from network effects, these tend to be winner take all. Facebook was winner take all. We have a couple other social media sites as well. Most of the biggest ones owned by Facebook, like Instagram. YouTube was winner take all. You just need one video sharing service like that. Amazon was winner take all. Apple was winner take all. If you were trading BlackBerry, if you were trading Nokia, trying to get enough money to buy Apple stock, you're much better off just buying the category winner. And it was apparent very early on that Google and Apple and Amazon were going to be category winners. In the same way, it's extremely apparent to me that Bitcoin wins the store value race. It's a winner-take-all category. It's going to suck the value out of gold. It's going to suck the value out of stocks. It's going to suck the value out of real estate as well, especially high-end real estate, which is used as a store of value. And it's certainly going to suck the money out of gold, which is sort of an inferior money technology. So just wanted to make this video so people don't overcomplicate it for themselves. It can be fun to trade. I don't think it's fun to trade cryptocurrencies or trade penny stocks, though. I don't like playing a game where the odds are so much against me. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.